Okay guys, so in this sessions we can discuss with question number 9 and 10. Okay, now so in these questions they have given two situations. I'll be explaining one situation, another situations if people can solve. Okay, now on 1/4/2015 the company decided to redeem the preference shares at par. Write the journal entries and prepare the balance sheet after redemption. Now the equity shares is 1 lakh, so they're redeeming at par. So leave about your second situations first. So how much you need to pay? 1 lakh, because it is under par. So preference you need to pass due entry preferential capital account data to preference shareholders account 1 lakh, and there is the information that they're issuing new equity shares or not. So when there is no, they're not issuing any equity shares, you need to use your profit and loss account and general reserve account. Now how much we need? 1 lakh. So profit and loss account 60,000. Okay, next total we need 1 lakh. So from profit and loss account you can use 60, remaining 40 you can use it from general reserve account. Okay, so that means the preferential capital account in the balance sheet liability side over. Next you need to check with your cash balance 75,000, but we need 1 lakh. So at that time we can sell any sundry assets. So remaining at what value we can sell? Remaining for 25,000. So preference share, that is bank account data to current assets account. So remaining amount, so 1 lakh we need, we have 75. So remaining for 25,000 we need to sell the any sundry assets. So I am selling sundry assets of 25,000. So final payment. Okay, you can next. So in balance sheet the preference share capital, the equity share capital will remain same. Preference share capital you need to show it nil, or you can ignore. Next, general reserve account 10,000, that is 50,000 minus of 40. Capital redemption reserve, that is we are not issuing any bonuses, so it is 1 lakh. Next, I have current liabilities. Now sundry assets, actually we had 5 lakh, so 25,000 we are selling, so remaining it will become 4 lakh 75. In the same way, in the next question the extra adjustment is we are issuing at premium, so which is similar to your previous question only. So instead of 1 lakh you need to consider 1 lakh 5. Here bank amount due, that is, so here we used to pay 1 lakh, so we used to sell only 25,000, but here in this question we need to pay 1 lakh 5. That means the remaining amount shortage is 30,000, so we need to sell the value of 30,000 assets. Okay, so remaining thing it will be same. Now profit and loss account 5,000. Profit and loss account, that is remaining out of 60 we are using 5,000 for paying of premium, so remaining will be 55,000. And why we are taking 45,000 here? In previous questions we have taken 40,000, but we are taking 45. Why? In this sense, in previous sessions we used to take 50,000 from 60,000 from the profit and loss account, but here we are taking just 55,000, so I am taking 45,000 here. So remaining payment entry, so nothing will change, which is similar to your previous situation. Okay, next important concept, that is normally they used to give how many new equity shares we used to issue and what is the rate of discount or premium, but in this question they have not given how many equity shares you need to issue, so you need to identify. You can check with your question adjustment. The company has decided to redeem all preference shares at a premium of 10%. In order to provide for the redemptions of these shares, sufficient of equity shares of rupees 10 each, but we don't know how many shares. Okay, we need to identify that. It issued at a discount of 5%. Find out the amount of fresh issue. Write journal entries in the books and prepare balance sheet after redemption. For that you need to apply this formula. The number of shares equals, or you can apply this direct formula, redeemable preference share capital plus premium payable on redeemable preference shares equals to, always I was telling that your liabilities value like your premium and if preference share capital you need to pay it from premium and divisible profit, right? So in the same way, or sometime we will pay equity share capital. In the same way, redeemable preference shares plus of premium and payable on preference shares we need to pay with the help of securities premium, that is in order to pay premium plus profits available, that is divisible profit, plus a fresh issue of shares into rate of premium or discount. So we don't know fresh issue of shares, so you need to assume it as X. Now, so here redeemable preference share capital, in your question you can check with the redeemable preference shares. There is a 2 lakh of redeemable preference shares, 2 lakh plus premium, so they are telling that 10%, so 2 lakh into 10% you will get 20 equals, now premium, so you can check with your question, there is a premium of 5,000, so I am taking 5,000 here, so here they have taken reverse order, it's okay. Next, profits available 50,000, which is there in your question. Okay, next, we don't know fresh issue of shares, we need to assume it as X. Now here they are telling that we are issuing at a discount of 5%, so 100 into 5% you will get 0.05. okay, we don't know, right? So that means on X we are issuing at 5% premium, so 5 divided by 100 we will get 0.05x. in case if it is discount you need to deduct, in case if it is premium you need to add. Okay, now that is 2,20,000 equals 55,000 plus X minus 0.05x. so if you do maths equations, for example if you carry this to you 2,20,000 to this side, so here 2,20,000 minus of 55,000 you will get, so 0.95x equals 1,65,000, you will get 1,73,690 total equity share capital. Okay, now total equity share capital is 1,73,690. so if you apply this amount, 2,20,000 you know 50,000, that is divisible profit, 5,000 security premium plus 1,73,690 minus of 8,690. How we are getting this 8,690? 1,73,690 into 5% you will get 8,690, that is your discount. Okay, it will get tally. Now lay out this calculations directly, you can go with your question, sorry answer. Preferential capital account 2 lakh, premium 20, you will get 2,20,000. now so we are issuing new shares, bank account, don't record only discount on issue of shares 8,690 we have calculated on 5%, to equity share capital 1,73,690, so 1,73,690 minus of 8,690 will get bank account, that much amount we are receiving. Okay, next, securities premium account, total we need to pay 20, but we have securities premium account 5, remaining 15,000 we need to pay it from profit and loss account. At last we need to pay for preference, that is we need to settle the face value, so profit and loss account where we are taking 35, so you can check, we need total 2 lakh. Okay, 1,65,000 we are getting from equity shares, new equity shares, so remaining balance is profit and loss account. Okay, next, preference shareholders, that is a settlement you can, so at last you can prepare balance sheet. Okay, so which is similar to your previous question. So next you have discount on issue of shares. Normally in case of premium we used to add it for share premium, but here we are getting discount on issue of shares, so you need to show it under other current assets, so remaining thing it will be same. Thank you.